Welcome back
to another week
of your favorite crypto podcast,
Sometimes Crypto,
the Unscripted.
Crypto Podcast.
Hey yo,
We've survived a full year around the sun.
and a full year of Bitcoin games and crypto games.
Yep. It's been a hectic year. A lot of stuff has happened.
A lot of things have happened. Our channel has grown.
And a lot of things will continue to happen 2025.
We will be here for the full, ideally, if history repeats, the full bull run cycle. We will complete a full cycle. And we should be here for the bear market with you all.
Yep. Build during the bear market, guys. Super important. If you're joining us now in this part of the cycle, take it easy. Don't get wrapped up in too much FOMO.
Buy the dips.
Buy the dips whenever they come.
Like
5%,
right now.
10%, 15%. Right now is a great time. Bitcoin is sitting at a pretty low price.
92,000.
Yep.
92,100.
That's a pretty low
my
price
dog.
for us.
Excuse the dog barking, by the way.
That's a pretty low price for us right now, seeing how we've been in the market and been aware of what's been going on. But for people who aren't aware, 92,000 might actually be surprisingly high.
It's quite a bit of money, if we're being honest.
It is, but thankfully for crypto, you don't have to buy a full coin. You could always buy fractional coins.
You can buy fractional stocks too.
Yeah, but I feel like that depends on the platform that you're buying. Most platforms are doing that now.
Yeah, but it's becoming common now you can buy fractional pieces of things. Before it wasn't. Before you had to buy a full asset, a full stock.
Yeah.
Also, to put perspective, Bitcoin is still quite bullish.
Oh, yeah.
In the grand scheme of everything, we haven't lost
Any faith.
any major zones. We're if anything, we're really just rearranging in a new higher zone.
That's exactly what it looks like. What was it? It's been trading around this price for a couple days now, right?
A while, yeah. We've been here for a couple days. If I look at the daily, yo, this dog. I apologize for the dog. The cleaning lady is not that cleans the house, but it cleans the apartments on like the outside hallways. She doesn't like her. The dog doesn't like her. Doesn't like noise outside the house. Better said.
Very defensive dog.
Yeah, you have no idea. So, pulling up this little. From the minute we made our first red candle, right?
December 27th?
No. From the minute our first red candle in this since breaking 88,000. We've been here for 48 days of range since making an all-time high, pretty much. So, like, quick share of screen for this. Before we jump. So, if we look at it here, this is when elections occurred. Right? Yeah, right around here. Elections occurred here. We rocket ship up. Jesus, can't speak. God damn. I haven't been drinking that much today. Jokes.
Water.
But essentially, all-time high we hit right around here, the 17th. Boom. And then we've been coming down.
Rejected.
We rejected off of this little line right here from the 1 touch, 2 touch, then our 3rd touch of rejection. So now if you really look at it, we're just making a new trend line. We're in a downtrend, of course. But we still have all this support down here. We lost this support zone, so I'll just move it for everyone. All this is a support zone pretty much. All the way as low as 85,000. So, if anything, we're in a cool off zone, if you really want to think about it, and consolidation phase again.
Yep, that's what it looks like to me. Consolidation, a lot of consolidation.
It's to zoom out again. we consolidated from this point to this point.
And that's a pretty significant amount of time.
It was months. From peak to bottom, from peak to bottom, our deepest drawdown was 32%.
Yeah.
And our current drawdown,
what, 15%?
A little more, I think now. I think we're closer to 17. Oh, Alex was right on the money. 15%. I was wrong. So yeah, if we go deeper, it'll be a 20% pullback.
Yeah, I don't see a 30% as of right now.
I wouldn't see a 30 until we lose this 85. Once we lose
that 85, I don't think it's gonna. I'm a little skeptical on that happening. I do think with the coming months, we're gonna see more bullish momentum, take us to a higher high, and then maybe we could pull back down to the 85.
Yeah. Also, 32. If we do get a 32% pullback, it would take us to our next support zone, our very big support zone of about $72,400. So there is a ways to go before we get there, and there's support along the way. So we just have to wait for sentiment in the market to see what happens. Mind you, we have Trump's inauguration on the 21st. So is that enough bullish momentum to continue the uptrend? Have we had enough downside? As of right now, also, since we're already on it, if it loads, to liquidation heat map on the 2-week, which is not a small heat map, we still have some pressure down here to the 91,000.
Yeah.
If I go to the monthly, if it loads, this takes a while. There isn't a whole lot below 88. This one might be tough.
You think the 3 months is gonna load faster than the 1 month?
Nah, impossible.
Oh, this is the 1 month.
Yeah, we're currently loading up the 3 month. Boom. So that's all the liquidity we have.
Who the heck's got?
And it's not much. It's only hundreds of millions of dollars relative to the other side. And then here's our really big, the largest amount, 65, which I can't even see which is 470, $500 million, we'll call it, at that zone.
That's a lot.
So there's not a lot of liquidity to the downside. This is really far. This isn't a big enough magnet to really do much at this point in time. Mm-hmm. If we start coming lower and orders start building, then yes. But as of right now, there's enough orders because we have very similar upside pressure in terms of volume. If it loads, you see hundreds of millions, and then it does wane off once we go to the higher, like the 100,000, 110,000.
Interesting.
Let's get away from this chart because this thing sucks for my computer. It's like having a panic attack. So as of right now,
I was gonna say, on the other hand, we have the interesting fact that we are pretty low overall this month. I think we started off at like $94,000-ish Bitcoin.
So weekly, let's go back to the daily. Yeah, we opened the month on the lower end of this candle here at 95. So we are down from the open of the month.
Yeah, and if you remember the chart that we talked about the monthly returns, this is the first time we're ending December on a red note after a halvening.
It hasn't ended yet. We have 1 day left.
That's true. we have one. William's still hopeful. William's like,
No, I'm not hopeful. I'm just saying it's gonna most likely end red. However, we can never.
yeah. By the time, okay, so mind you, this is the last episode that we're recording on 2024, but this will be the first episode you see on 2025.
It should be out this week.
Yeah, so we're working on like somewhat predictions.
We're speaking in the future. But yeah, as of right now, really, a lot of consolidation. Could we see a 7 all the way to 76? Yes. And our lower zone would be 72. I don't see us going lower than the 68. Like, I don't see us getting lower than really 72. Only for the reason that Bitcoin in history has never gone lower than presidential elections low of that day, as we talked about in a prior chart up here. So all these lows are from election time. This would technically be our new low of 67. If we go back in history, this was election. This is when we had our election. That was the low of 13,000. We do go lower than the all-time high, but we don't break below our election day low of 13,500.
Yeah, so 65 should definitely be bottomed.
65, really 70 should be our bottom if we were to revisit that on the, higher end. Mind you, this was our consolidation zone, by the way, that we had until election, until we broke out of it. Quite a big zone. As you said prior, about 33, 34%, give or take. So not much. We can be looking at the same thing now. But enough Bitcoin for now. Also, enough Bitcoin market cap.
Hey, I do want to show that monthly.
This is filled. What you want to show?
The monthly chart. Gains,
the one that
returns.
Oh yeah. Also, mind you, market cap rejected off the last cycle's peak. We're currently just retesting prior support zones at this point, and we still broken out. So again, we're still in good position for future push once we continue the uptrend. Side note: this is total 3, so it excludes everything except excludes Bitcoin and ETH, keeps everything else. So we're still in good positions, my opinion. Downtrend for now, but my macro, nothing, no structures have been broken. Nothing significant crazy has happened just yet. Just consolidating. I'll let Alex share the chart.
Yeah, that's mostly what we're in right now, consolidation period.
Which is very typical for bull runs. It's real common that we get 30, 25% corrections along the way. We've had multiple of those just in this year, and we've had many more in prior years.
Yeah. So this chart that I'm showing right now is the monthly returns for Bitcoin, all the way back to January 2013. I wish they had 2012 because that was another halvening year. But we do have 2016 as one of our first halvening years, 2020, and then now 2024. Right? So for 2016, the last 4 months of the year were green on that halvening year. For 2020, the last 3, so November, December, October, November, December. However, as of right now, this can possibly change. Something would have to happen within the next 48 hours, though.
Unlikely. But yeah.
Yeah, where it's a little unlikely, seeing how we're in a consolidation period. October, November are green, but December, for the first time in history for this chart, in a halvening year, it's in the red. which is not exciting, but it's just it is what it is, I guess. But if we look back into like 2017, February, beautiful month, followed by a bunch of more beautiful gains throughout the entire year. And then 2021, the first 3 months were super green. Second quarter was red, but then we also had a lot of returns still. Where like this was like the point where it started really tanking.
So something that chart doesn't show, which I didn't show on my chart either, or you could have seen it. It's the Socratic, the RSIs essentially. It's it's not a leading indicator. It's really more of a late indicator because it waits for price action to move, so that then it could determine whether it will continue if it go up on the RSIs or turns to the bottom. Typically, the RSIs is just showing how much pressure of buying have happened. So if it's overbought, it's been on the up end for longer. If it's oversold, it's been on the bottom end. So typically whenever that reaches the top of it, it usually at some point or another comes back down. At this point, the weekly RSIs, which is the most used for macro outlook, has been oversold for quite a while. Now it's leading downwards, going back to it's been overbought. Right? I apologize. It's leading now to the oversold, meaning there's been too much selling pressure. So it can set us up to start January, February, March, April in a position of an uptrend. If in the next couple of weeks it continues to consolidate, it will come down, and that should hopefully spark up buying again.
Yeah.
So we may see a green Q1 instead of a mix match, as we've seen in prior happenings. It's really all speculation. Until it doesn't start playing out, we won't know.
Yeah.
Kind of how the market works. You don't have a crystal ball. You don't know where price goes until it goes.
So I have another chart. Let me see if I could zoom out though, because it's a little big. And I think you've seen this chart also.
Which one? So many charts.
Yeah.
I have seen that chart.
Yeah, this is a Bitcoin halving circle chart. Where the top 12 o'clock marks the halving. So essentially this chart tracks time based off of blocks, which is the natural timing unit within the Bitcoin blockchain. On average, there's a new block every 10 minutes. And there's a halving every 210,000 blocks. So for one full rotation, it will mean there's a passing of 210,000 blocks. And this chart just kind of like goes around with the price of Bitcoin around the clock. So these circles are just indicating a price. So $10, $100, $1,000. Here we see this outer circle represents 100,000. Mind you, Bitcoin has never intersected with a line beforehand. But we are bordering the 100,000 price. And as time progresses, according to this chart, Bitcoin just continuously goes up. Yeah, I think that's an interesting chart to take a look at. This one in particular has a lot of data points, so it looks pretty smooth, but you see like indicators where it like kind of like shoots up, crashes down, and stuff like that. This is a fun chart to look at every once in a while.
Can you hover where it can possibly intersect that? I'm assuming that's like the prior all-time high, like 68,000.
Would it intersect where? Oh, like over
right there,
here?
right there. Up, go up. Go to like the closest peak to where it's closest to the following line. If you get what I'm
61.
saying. Look for 68.
63. Oh, probably over here.
That's a 68 over there.
67.
All right, then go back to that one and go to that 61, which I think would be the peak.
Yeah, this is the closest one right here.
That's the closest one over there. All right, go back to the one that we were just at. That's 61 on the other side where we're currently sitting at.
50, 58, 50, 60 right here.
60. So
63.
for us to intersect, we would have to go to 60.
Yeah.
Which it would break, like as we said, it would break Bitcoin's history of not going below election day lows.
Yeah.
By 6,000.
Yeah, so this is somewhere within the next 6 months.
Month. Oh, that's 6 months?
Yeah, give or take, because like each quarter it represents about 1 year.
Ah, got you.
So this is 1 year, this is 2 years, this is 3 years, this is 4 years, and then the halvening.
So it's unlikely those two prices would intersect.
Yeah, essentially seeing 60,000.
Just based off historic data.
Yeah, just seeing 60,000 within the next 6 months to me seems ridiculous.
I can bet a lot. I can safely say I don't think we will see a $68,000 Bitcoin ever again.
Mm-hmm. Yeah, so this is just a cool chart because I don't see much shape with it like this.
Yeah, if it did that, it would break historic data by quite a bit.
Essentially.
Also, it breaks the other factor of Bitcoin's pullbacks always get smaller and smaller the bigger the market cap gets.
Yep. Yeah, that was something that I forgot to mention in that monthly returns chart. The monthly returns are like gradually getting smaller, and that's because as the price gets bigger and more people are adopting Bitcoin,
purchasing.
Yeah, it takes a much bigger movement for it to like price action for it to move in percentage.
In pretty word, it takes higher money inflow to move the price.
To move it up, or money outflow to move down.
Or down, yeah. To move it up or down, it takes a lot more money.
Significantly more money. So the percentages, we are expecting it to not be as like lucrative as it was beforehand.
You expect diminishing returns as Bitcoin's market cap continues to grow.
Yeah, I'm actually opening up that page again, the one with the monthly one, because at the bottom it had some very interesting information. So it says, since 2011, the cumulative growth of Bitcoin has exceeded 20 billion%. 20 million%, far surpassing the cumulative growth of 541% for the NASDAQ 100 index and 282% for major stock indices. When considering annualized returns, Bitcoin rate of return stands at about 230%, which is 10 times higher than that of the second best performing asset class, the NASDAQ 100. And over the same period, large U.S. stocks experienced an annualized return of 14%. High yield bonds saw a growth of 5.4%, and gold had a return of 1.5%.
Yeah. The returns you got on Bitcoin specifically, not even just the whole crypto market, because everything else is more unstable because they have lower market caps. It's quite insane.
Yeah. It also has the most history. But that being said, like looking at that chart, the percentages are gradually getting smaller. Like we're no longer seeing 60%. 60%, for example, gain in 2013 we saw 61, 172, and 60%. Oh, and 449% growth in individual months. We have not passed 60% growth this year,
and unlikely we will.
Yeah,
not in Bitcoin. So remember, you gotta, as viewers, you gotta be aware that Bitcoin's one thing, and every other crypto below is another. They themselves can have 200%.
1,000%.
Who did? Yeah, but XRP did 200% in a week.
Yeah,
or less in a few days. So did ADA. Like all these other assets do move, or have the ability to move much more aggressively than Bitcoin.
Yeah,
That's why the alt rotation, you move away from Bitcoin into alts for that. Excuse me, the higher gains.
Mm-hmm.
I was gonna just mention before we moved on. It's similar to what Michael Saylor has talked about in terms of the growth is. He goes, on average, as of right now, Bitcoin returns a monthly return of 60% on whatever you invested. Then he goes, on the later half of that, once I think he says 1 to 2 more cycles, is going to, as we diminish your returns because of the market cap, it gets to 20%. And he goes, and it most likely won't go below 20% at that point, just because of the sheer amount of volume that will be coming in, just because of the size of the asset itself.
Mm-hmm.
So he goes, it's going to be infinitely going up pretty much, he says, at 20% a rate for years to come. Really until he goes like 2035. And he goes, at that point, Bitcoin, the asset itself, is base case, I think he goes, it's like $1 million, or like $1 million something. And he goes, bull case, it's $13 million.
Wow. $13 million is crazy. But for 2035?
Yeah.
Yeah. Base case 1 million. That does seem very. That seems a little bit on the bearish side to me, seeing how we're flirting with 100,000 already.
So yeah, but so $1 million, that's a 10x from here.
Yeah.
I mean, 13 million is also
Facts.
like from $1 million is another 13x. So I see what you're saying.
Yeah.
So maybe it is a little bear case if the bull case is 13.
Yeah.
I could see that too. You're right.
Yeah.
So I just wanted to do a quick math before we continue on to something else. Just because I don't want to run the number in my head.
I think I know what math you're gonna do.
Do you?
If you invest X amount today,
No.
in 10 years, oh.
That would be Bitcoin's market cap.
Oh wow. 1,000 million billion trillion $273 trillion
If Bitcoin hit that
at the bear at the bull case.
Bitcoin would be $270 trillion. The current asset class itself is around all commodities, real estate, stocks, everything is worth approximately like $500 to $400 trillion.
Mm-hmm.
That means the asset class would almost be close to $1 quadrillion. All those asset classes combined would be close to $1 quadrillion.
Mm-hmm. So big numbers.
Because this is only, as of right now, crypto's only 3 trillion of the entire market cap of that whole pie.
Yeah.
So that's stupid numbers. I don't know I don't know if it's gonna happen, how it's gonna happen, the amount of money will have to come in, but that's insane.
I feel like money will also come out of other assets.
Also true. I'm not gonna say that, but still, it'll be closer to $1 quadrillion than where we are now.
Like for example, any real estate will probably start being priced in Bitcoin at some point, and in pricing real estate in Bitcoin, you kind of like take away value of like the dollar value of the real estate asset itself, and it kind of like transfers over to the Bitcoin. Also
true. Or a lot of people could maybe at that price range may take out loans on their houses, mm-hmm. or X percentage, as we already do now. People already take out loans to just put it in there. So mm-hmm. we shall see. But also, I agree with you. Assets will flow from one to the other. 100% agree with you.
Yeah. Yeah, definitely an interesting number.
So on Saylor's news today, mm-hmm. Monday, he announced he bought another $209 million worth of Bitcoin at a price of $97,837. Homie does not stop.
Significant.
He does not stop buying.
Yeah.
So
yeah, he does not stop.
What do you think his average price is? Now
his average price, $60,000.
He's good with it. 62 and some change.
Okay. Okay. Yeah, he's buying a lot at a significantly higher price than he's been buying.
The first time he bought, his average, the first time he bought since we started talking about it, his average price was about $53,000. I believe, and now we're sitting at that quite a big, quite a significant amount.
Dude's definitely ramping up his average price.
He's also very quickly playing out his 2-year plan, I think it was 3-year plan of buying Bitcoin. He's more than halfway there at this point. He was going to buy a total like $41 billion. 42 billion. He has to be halfway there by now.
And he announced that plan only a few months ago.
A month ago. At the end of Q3, he announced it. So so two months ago. Quite substantial.
Crazy. Yeah, substantial indeed. That guy's a maniac.
Yeah.
So William, what I got for us is mostly tax stuff.
You love them.
Tax.
You love taxes.
I don't know if that's necessarily true, but wanted to see if you want to go into that, or if you have anything else that you want to talk about first.
You say if I want to get into taxes, I said yes. In my head.
Okay, cool. Okay. Okay, so I'm gonna start across the seas, not here locally. Starting off with the great country of Turkey. They're essentially gonna start introducing stricter anti-money laundering laws. KYCing everything up, left and right.
Just like us.
But
just like the States.
Yeah, just like us. Literally, it's every government that's gonna want to start implementing KYC.
Yeah.
But they are going to require any organization to provide KYC for any transaction over 15,000 lira. 15,000 Turkish lira translates up to about $425 US.
Quick question. So is that similar to how in the US, if you go to withdraw or deposit 10 grand, it flags the system and you have to say, where's this money come
Correct.
from or whatever?
Exactly. Yeah. So in the US, we have a $10,000 limit for like, if you're going to be doing a transaction of this much more, then you need proof of like where the funds came from.
I wouldn't say a limit. I would say
threshold.
A threshold. Yeah, because you can have more than that. You can deposit 50, but you just have to answer questions on the 50
as to where those 50 came from.
Exactly.
So essentially dropping that down in Turkey to only $425 is crazy work.
I'm agreeing with you. I also don't know if 15,000 lira over there is a lot of money or not.
True. But essentially, if these transactions are not properly KYC'd and documented, it can be flagged as risky, potentially causing a freeze in the transaction.
Which that does kind of suck because governments don't take into account how volatile and how quickly the crypto market moves. Like if you get lucky, you put $100 in a meme coin, it becomes $3,000 in a day. And if you luckily were able to withdraw and everything else, you have those $3,000. I'm already flagged. It's like I didn't even do much. Like it just happened.
Yep. Yeah. So that's not great for anybody trying to send money. It's very restrictive.
It I think it's way more restrictive in crypto because of the reason of how much we move. Like on the stock market, it's a little harder. And speaking from stock specifically, like U.S. stocks, it's a little harder to get those same returns overnight or in a 2-day period if the stocks are not being volatile or they're not moving fast. Because we just don't have that volatility in the stock market.
Yeah. So to kind of like shift sides a little bit on limiting transactions and facilitating trades. Russia is taking the opposite role than Turkey to a degree, kind of tangential. But essentially, I think I just made that up.
I'll take it. I accept it. We make up words all the time here in this crypto podcast.
But obviously, Russian President Vladimir Putin has been a big advocate for de-dollarization and getting the global transactions off of the US dollar. That's why BRICS is a thing. But essentially, one of their new tool sets, and I think we might have talked about this, is using the Bitcoin network to get around government sanctions.
Circumventing U.S. sanctions.
Yeah, circumventing U.S. Sanctions. Essentially, United States or companies cannot do business with Russian companies. And the Russians are like, well, we want to do business. And particularly for the United States companies, if they find a good deal, that some people will be willing to do that business.
Well, it's not even.
But the only way.
But it's not even U.S. companies though. To add, it's also like other not even companies. It's other countries cannot.
Yeah,
do
Western.
business.
It's Western.
Yeah,
Western countries. Yeah, so it's multiple countries that can't do business with Russia.
All G7 for the most part.
Mm-hmm. But essentially, there was this interview on a Russian network television called Russia 24 TV, where the finance minister Anton Silunov.
Don't even try. It's okay.
Yeah. He confirmed. He's like, yeah, we have a framework for using Bitcoin and Bitcoin miners to ensure transactions can be done with foreign entities. This is polarizing for most people because there's a reason why there's sanctions with Russia, but at the same time, when it comes to money, people want a money that can be used without government oversight. So it's like there's pros and there's cons.
Yeah, also not defending Russia or whatever they do, but it's also like what we deem as bad, others don't deem as bad. It's not like one of those. Russia, at least in this situation, isn't one of those countries similar to like North Korea, who we do have like blacklisted, who we don't do business with, who we do not communicate with at all. Like Russia is a global superpower where we do communicate with and try to have on neutral terms with each other. We do try to be on neutral terms.
Yeah, so like in reality, what the issue is not the companies within Russia. It is the Russian government it's the Russian government. So in like the eyes of like the company of the organizations, they're like, well, why should we be punished for the maldoings of our government that is obviously a dictatorship, even though they do hold elections every so often. So essentially, why should the individual be punished for the acts of the government? The usual like implication for sanctions is like, oh, if the country's doing bad because we're limiting off their ability to do transactions with the rest of the world and build their prosperity, then the government has no way of feeding itself through taxations and stuff like that. But in the case for Bitcoin, like it kind of fixes both of those issues. It prevents the government from forcefully taking money out of their accounts, which can happen for bank accounts. Essentially, they will freeze your bank account if you do not pay taxes. They cannot freeze your Bitcoin account if you do not pay taxes. And then at the same time, they can limit who you do transactions with, as your accounts can be frozen, but not for Bitcoin because that's completely decentralized and has no government oversight.
I have a question, because you keep on referring to companies with these sanctions, which it does apply to them, but the Russian minister was speaking about companies or about the government itself. I'm asking that as a question. Or if
so
you're not
like
sure,
part
that's
of the
okay.
issue. Part of the issue. This is the finance minister, which is just someone who's in charge of Russia's finances. Like, he understand at some to a degree. He's understanding that if the companies are not are not making revenue, then the Russian government will eventually collapse because of the fact that they won't be able to generate revenue. What I don't know is, and I just straight up don't know, is if Russia is like owners of the companies that are within their country, like China. Yeah. So if that's the case, then that's slightly different. Because now, okay, so even the companies themselves are just owned by the government. Where if that's the case, then yeah, then that's just beneficial for the Russian government.
Yeah, because my understanding was that Russia has sanctions, and then because Russia has sanctions, it just so happens it goes down to the Russian people and Russian
Correct
companies. But it's not the U.S. attacking companies, is the U.S.
the companies. It's
the
U.S. attacking the
Russia.
government.
The government of Russia, not the Russian people. But just they go hand in hand.
There's no beef. Yeah. There's no beef with the people. It's beef with the government.
Yeah, and it just goes hand in hand. And my understanding was Russia was using the Bitcoin for Russia to do business, not just so the companies. It could be both. I'm not saying.
It's mostly for the companies, but yeah, at the same time, the government could also do this.
I thought it was implemented mainly for the Russian government to transact with the rest of the world, and then the Russian companies would just do the same thing. That's the way I understood it.
Yeah, so this is gonna go a little bit beyond my knowledge, my scope of knowledge for the topic, but I do remember having a conversation with someone where they were talking about Bitcoin miners being the ones that validate transactions on the blockchain, and Bitcoin miners to a degree have a say on what transactions they're going to add onto the block.
Correct.
Hence, like, transaction tips, like, that's a whole, like, fees are essentially tips to the miners for including your transaction on the block.
That's why sometimes you see fees of like $700,000. That's someone who just wants to get the transaction done faster.
Exactly. But they were telling me, and I don't know exactly how that would be implemented, but they were telling me that miners could potentially do their own type of sanctioning, but this is completely decentralized. So this is a network decision, not a government decision, to provide sanctions based on countries if they're like going to war, unprovoked, like type of stuff.
Yeah, but
how they would identify those transactions, I'm not sure, but it is possible that Bitcoin miners do have some authority to do their own sanctions.
Yeah, but that in that situation would be the word of the people.
That's a global democracy.
Yeah, that's the network of an X amount of nodes saying we don't agree with what you're doing, so you will not be allowed to transact for what you're doing. And this isn't my decision.
Exactly.
This is the entire network reaching an agreement.
Yeah.
It's not one party, because one node could say no, but if one says no, but the other 9 says yes, it doesn't matter. But if one says no and the other 9 say yes, then the vice versa.
Mm-hmm.
So yeah, that's a different story. That's as you said, the global scale speaking.
Yeah, that's a global democracy is what that is. How exactly that gets implemented, I'm not fully aware because it
hasn't happened yet. Also,
yeah, it hasn't happened.
It
hasn't happened yet. Yeah, but it is possible, supposedly.
I guess we'll cross that road when we get there in the next couple of years because it will happen at some point.
Yeah, that eventually will be a thing that does partake.
So we'll see. Put on your miners, just a quick little throw in. There was a little bit of FUD the other day or the other week with Russia saying they're banning crypto mining and everyone took it as a general statement, which it wasn't the case. It's really like these 10 regions within Russia that were not going to be allowed to mine Bitcoin for the fact of their power grid just won't be able to sustain it because the infrastructure just isn't there yet.
Yeah.
Similar to what happens in other parts in the U.S. where they have to, if you're mining Bitcoin, you can only use the excess power. If there's no excess power, you can't be mining. You would have to do X, Y, Z to circumvent that. Just throwing that little foot out.
Yeah. And then the other thing that I have in terms of taxation and government oversight,
we love it,
is the IRS is essentially publishing a new rule saying that they are mandating crypto entities, including decentralized exchanges, to conduct know your customers acts for any people that they're servicing.
The U.S.?
Yeah. How they're going to implement this, I don't know. There will be some ways to circumvent that also, because if it's decentralized, there's ways around it.
So what I keep on hearing, because this has been an ongoing topic because it's been brought up 1,000 times. It's similar to what happened, I believe, with Uniswap. They were hit with a Wells notice. And not for tax, but on the taxes side of it, the thing is, since the front end is not decentralized because they're using a Google website or whatever, like the domain itself isn't decentralized. So the Web3 aspect of it, but you're gonna get hit with the front end of it, and that's where they're gonna try to get you. Or they're gonna try to squeeze them to doing it, especially if they're a US based company, which most aren't, but the front end might be. So they have to see how they're gonna work around that, and maybe just move completely to a Web3 front facing as well, front end.
Yeah.
Also, the government apparently already has technology to track, like, to cluster all the transactions. Like, where who Diego used to work for, it was Consensus. He didn't work for Consensus, but similar to what Consensus does, they just the government, the IRS has them as well working for them. So they just cluster up all the information they can and just see where the most interactions are occurring within this one wallet. Example would be you offload from Coinbase because you have to offload somehow, or if you're putting money in, wherever that money goes to next, if they communicate within a certain amount of either exchange addresses or going back and forth with other wallets, then that's how they track, oh, this is this person's funds, because you move them within an X number of wallets and addresses.
Yeah.
So
I don't remember what company it was.
I don't remember either at this moment. But I think I've said this. I think you've agreed with me. The only way that they won't be able to track you at one point or another is once we are far enough adapted that we can communicate strictly with Bitcoin or with crypto.
Decentralized, yeah.
And even then, since if you're purchasing things, if you want to buy a house and you want to use Bitcoin and the person accepts Bitcoin, that title will still have to be signed off to you. So there'll be limits to how far you can go, in my opinion.
Yeah. There's gonna be a lot of infrastructure that needs to be developed over the years, for sure.
Not even to circumvent, just to sustain,
integrate,
just to sustain the system that you want to build around it. But yeah, I don't think we're gonna be able to circumvent taxes
for a while. Yeah, circumventing taxes is a whole different story.
People could probably get away with a few dollars, but if you're trying to make out with real gains, you won't. I don't think you will be. Impossible. I'm also not saying to.
Yeah. So
we're also not advocates to tax evasion. By the way, we're just saying the government's unfairly taxing crypto. In our humble opinion, and they're dipping their hands in too many piles.
Yeah, this is essentially like their final breath for power. over crypto assets in general, because they've tried attacking crypto left and right, and they're pretty aggressive with it.
That they are.
Yeah. So the rule said a person providing trading front end services ordinarily would know or be in a position to know the nature of transactions potentially given rise to gross proceeds from a sale of digital assets. If that person maintains control or sufficient influence over the trading front-end services to have the ability to determine whether and the extent to which front-end services have to have the ability to determine whether and the extent of which the transfer of digital assets involved in a transaction gives rise to the gross proceeds.
Yeah.
Did that make sense?
It's lawyer speak.
I read that and I count.
It's lawyer speak.
I read that and I was like, what the heck am I reading?
From my understanding, what it said was if the front end, example, Uniswap, gives a platform to buy Bitcoin, the simple numbers at $100. They know who bought it, how much they bought it for, what time they bought it for, all this information. It's moved off to the wallet, but then that same person goes back to sell at a gain of 200. He knows how much was sold, the amount, and they're basically saying that since they have track of all that information on their front end service, that they are responsible for the gathering and the
collection
of that information. That's
gathering,
why I understood
reporting.
At least.
Yeah.
I'm also not a lawyer, so
sense.
what do I know?
Yeah. Yeah, so like the concern is also like developers, because the rule doesn't really say how developers are going to be affected. Yeah, because it's like you said, if it's the front end thing, like let's say there's a front end website A and front end website B, but they're using the back end of a specific blockchain, right? Or smart contract. People using website A can still transact with website B, but website A has no form or way of collecting information from people on website B. So like whoever owns website A will be in charge of collecting information from whoever's using website A, because that transaction can potentially go back to somebody who's also using the same website. But the developers are mostly just working on the blockchain. So like, just because the blockchain is doing its thing doesn't mean that they are responsible for
that. It's a tricky situation. It's like how far down the chain can the government reach to either what's the word I'm looking for? Oh, I just lost the word. To not, I want to say prosecute, but who they can go after. Can they go for the developers for creating not the website, but can they go to the developers because they created the system in which they're transacting on that Web3 channel? Or are they going to only be able to go after the person who set up the websites, or the company on the front end who controls the front end of the website, but they can't really go after the Web3 side of it? We really just don't know, because it just hasn't happened yet.
Yeah.
Like, we're entering that time, like, in the courts and laws, where until it doesn't happen and courts don't rule, we really won't know what's the lay of the land. And especially since the IRS is creating these things left, right, and center, and they're still not implemented.
Yeah.
And they want to treat it very the same as banks.
On a post, there's this organization called Coin Center. They said, so if you add immutable encryption-based restrictions to your software that protects the privacy of your software users and also prevent you from being in the position to know their transactions, you will still be obligated as a broker to learn the identity of the user of your software and report the details of the trades. So software is built in a way so that I have no idea who's using it, and no one knows who's using it. Like, there's privacy in this. The post continued to say, because like if the software is made like that, By this law, by this ordinance, essentially you are still required to provide that information somehow, even though the software is made in a way for you not to know. So the book continued to say, this is in effect a prohibition on building software tools that empower and protect users.
I agree. The truth of the matter is, we will have to create exchanges, the centralized exchanges, similar to what Satoshi did. The person who creates it has to walk away. And you can never know. 100%. You can never know the group that created or nothing, because if not, there's someone they can target. And since from the moment there's someone they can target, that exchange should be attacked, shut down, or whatever, or the law could try to be forced upon them. Or not, maybe I wouldn't say a law, because everything to a degree, laws are not terrible. They're not. It is when they're being misused and not truly spoken with the community in a innovation forward way.
Yeah, imagine someone who's running a Bitcoin node being held liable for facilitating transactions between two individuals. It's like, I have no idea who those individuals are. I just see a wallet address with X amount of Bitcoin wanting to send money to another wallet, a valid wallet address. Cool. That makes sense. I could facilitate this. I have no need for knowing their information. I'm just seeing something that's happening. Like, Bitcoin miners might still be liable for something like that, which is crazy. It's crazy work.
It gets to the whole, you want to make sure you're not funding terrorism. You want to make sure your money's not going to sex, to trafficking of human beings, and whatever. The further down the chain you go into the disgusting things that happen in humanity. You're also the governments are trying not to facilitate that, which at the same time goes against the way you want to use crypto to a degree. The freedom.
It's wild.
The freedom to be able to just communicate and transact with people without a third, fourth party involved.
Yeah.
No, it's going to be a slippery slope, and it's going to be a lot of growing pains along the way.
Oh, for sure.
Listen, I think we've shown the picture of the meme of how many phones have there been till we got the iPhone. Different huge innovation of phones, and then where Bitcoin is in that timeline. And it's and we're only on the second phone or the third phone.
Yeah, crypto as a whole is still relatively new.
We're still on the first innovations, and that comes with legislation, laws, enforcements, just as cell phones did.
Now that you mentioned cell phones, I forgot. I saw this video the other day on X about how the first mobile phone was a piece of wire, the antenna. You had to wrap it around an umbrella, opened up the umbrella. It goes into a little phone box. And then on that phone box, you also had another piece of wire that you would wrap around a fire extinguisher. And then you would have connection.
That was I thought the first one, not the first one, but the first full mobile one was, was that brick one that has a huge antenna.
No, this one was before that.
That's the first the first version.
That's first
Jesus.
OG type mobile phone.
That's crazy.
Yeah.
I mean, phones theoretically and similar to internet, it's all connected through cables.
Yeah, I mean, besides right now this is just wireless, but it's all.
But this isn't wired. This casing is wireless, but where it connects you to communicate is not wireless.
Oh, it's cabled.
It's cabled.
Yeah.
That's what I mean. This freely, and our laptops freely move around wirelessly, but where they connect to get the internet, for the most part, it's not wired. It's cabled.
It's cabled.
We have
100%.
I mean, I think we have cables in the ocean this thick, connecting. Yeah, it's the size of a human. It's
yeah.
Well, I mean, there's different sizes though. They're not all the same size.
The crazy thing is, it goes like this, and then there's layers inside, and then inside there's fiber optic cables, literally the size of a hair string.
Yeah, pretty much. Realistically, I think Starlink I think Dish Network, like those were the first true satellites, non-wired thing, like non-wired cables. Like they wired into your house, but the service, the receiving information was wireless.
Ideally, 5G should be a wireless thing, but like fully like global communication through wireless, but it's not there yet.
So. I think Starlink is like currently the best option for that.
Yeah, we would need some type of like lasers that just send information.
100%.
But yeah, that's about everything I got for us this week. You got anything exciting?
Yeah, exciting enough. Yeah, we can wrap about. Oh, I got two things. Mm-hmm. One's pretty quick. So, the EU is finally not finally, because they announced this I think a year ago now, almost, because it was like early in the year, that, as we all know, the EU has many more regulations than other places in the world. So USDT now, for them being non-compliant, will have to be delisted off exchanges that don't want to make it compliant.
Oh, wow.
Yeah. So we're going to see a lot less USDT volume within the European Union, which is worse for them, realistically.
Wow. Mm-hmm.
But that's going to start happening. And it doesn't really start going into... It starts going to effect at the end of this year, which is the next couple of days. So by January 1st, USDT will have to be off of any non-compliant exchange that wants to comply to those things. Like, it's being removed off Coinbase, because Coinbase is like, I'm not going to deal with this. It's easier just to
it makes sense.
Get it off. Not illegal, not banned. It's just compliant issues.
Yeah, just delisted. Non-compliant.
Which, if at one point in future their legislation changes, whatever happens, it can be relisted the same day. Mm-hmm. All that means, though, for the European Union is they will no longer be able to trade with a USDT trading pair, which does suck because that's where the majority of volume is. So anytime they use it, like if they go to use the actual euro, right, to trade on, the euro may have a lot less volume, meaning it's more, not more, it's more susceptible to those crazy pullbacks. That you'll have a larger wig that can get stopped out, they can get liquidated. It's a shitty situation for them, for sure.
Mm-hmm.
And for the most part, there isn't nothing wrong with USDT. They're still back. They still have, supposedly, as of we know, they still hold 1-to-1 printing of USDT to USD, and they also bought like almost $1 billion worth of Bitcoin like this week or last week.
Oh wow, that's a lot of Bitcoin.
Yeah, they bought 7,000 Bitcoin, I believe. And now this one does matter, because we've been talking about this for a while, and this is a good amount of money that would be coming into the crypto market. This happened. So our good friend Sam Bankman-Fried, FTX, his company, FTX now, should start releasing funds as of January 3rd.
Oh wow, it's right around the corner.
So this is what the tweet reads: FTX begins repaying $16 billion to creditors on Jan 3rd, 2025. Payments expected within 60 days, and guess what? A big chunk of them might flow back into crypto, is what they wrote. So essentially, they within that it starts January 3rd. The payment should be expected within the first 60 days of the 3rd of Jan. So within those first 2 months, we could hopefully start to see a lot of inflow coming back into the market. Because right now it's just a boring time, holiday season and all that.
Consolidation period. Yeah, consolidation tends to not be exciting. We're just like, okay, cool. We agree. We're still agreeing. No, let's agree at a higher price.
So I believe that the distribution will be the same as we talked about. It'll be first that 50,000 and below, then the million, then the hundreds, then the tens of billions, then whoever had hundreds of millions of dollars in crypto will be the last to get paid out. So we should see inflows coming in slowly but surely.
That's gonna be exciting.
Yeah, but that's all I got.
Yeah, well, that's definitely a great way to start the year. The new injection of capital from people who've been waiting to get back into the turbulent
The majority
waters of crypto.
of getting back into the degenness, the dirtiness of crypto.
Because once you try it, like, there's literally no going back. It just swallows you whole.
Well then, that got okay. This escalated
It's just
quickly. Well,
look, William, people love degeneracy.
this is true,
And that's why we're here.
and that's why
That's
we're
why
here.
we're here.
That's why we're here,
To keep you from making the mistakes the degens make.
and that we've made,
Inform you.
and that we've made.
Yeah. Yeah, because, we are degens to a degree.
Yes, that's why we don't buy NFTs
But-
anymore.
Yeah. But that being said, we hope you guys have a beautiful start of the year. 2025 is going to be amazing.
Should kick
lots
ass.
to come. Lots to come. 1% better.
1% better. Then just to preference, next episode after this one will be a little bit pre-recorded. It'll be sitting in that episode too, because I will be MIA.
Mm-hmm. Yeah.
So
But still as, hopefully as valuable as this episode.
ideally, the market won't move too much while I'm gone. If it does, I will still be paying attention. Hopefully.
Yeah, well, if you're here, please leave a like, drop a comment, share with a friend.
Subscribe
if you
follow. No, there is no if you can. If they liked it, they can subscribe to it.
Yeah, facts.
So
It's
listen
very
here,
easy, just one button.
the degenerate. I started the fudge out of that one. Like, subscribe, you follow, and hit the notification bell, and tell
It
Alex
really
he's
costs
pretty
you
in the
nothing.
comments.
It's absolutely free.
It is absolutely free.
Well, thank you for tuning in to another week.
Of your favorite crypto podcast,
Sometimes Crypto.
the Unscripted Crypto Podcast.
Ayo.
Ayo.